Why do most strategies stop working in the live market? Because they miss the most important thing, how market makers actually move price. Most traders hunt for signals but don't understand market structure. That's exactly where the Venom model comes in, a new ICT-derived strategy built around the logic of large players. It doesn't rely on guesses. It lets you precisely time entries. When liquidity has been taken, structure has flipped, and the market is primed to reverse. Later in the video, I'll show how this model produces trades with tight stops and targets of 1 to 5 or higher, purely from clean structure and trading the zones where real money operates. But first, let's break down what the strategy is and why traders call it the market's venom. The Venom model is a narrowly focused strategy inside the ICT framework. Its goal is to make you trade like a sniper. Enter only when all conditions line up, from the liquidity grab to the structure shift and the appearance of an imbalance zone. Why Venom? Because this model strikes like poison, precise, sharp, and only at the right moment, without noise, overanalysis, or hustle. The approach is one model, one direction, one decision. You don't flip between dozens of patterns. You wait for one specific scenario and act systematically when it appears. This strategy doesn't try to catch every impulse. It teaches patience, how to read the intentions of big players, and how to enter when most retail traders have already been trapped. To use the Venom model correctly, you need to understand what it's built on. The strategy rests on 5 key elements, and each one plays a specific role in forming the entry. It all starts with liquidity. The market always moves toward areas where stops are clustered. Venom teaches you to first identify the zones where price is most likely to collect liquidity, previous highs, lows, and areas where orders have accumulated. That's where the first strike usually happens. Next comes the fair value gap. An FVG is a zone where price moved so quickly it didn't leave a full footprint, a gap in value that wasn't filled. When an FVG forms right after a liquidity grab, that's a signal. An institutional player stepped in, and price may return to that zone before continuing the move. After that comes the market structure shift. This is the moment the market changes direction. The previous trend breaks, key levels are violated, and momentum switches. This is the third confirmation that the reversal isn't random. Now comes the entry. Venom uses the OT optimal trade zone, a retracement between the 61.8% and 78.6% Fibonacci levels. This isn't just a pretty number on a chart. It's the zone where professionals most often scale into positions. That's exactly where the trade is taken. And finally, timing. The Venom model isn't applied at just any hour of the day. It's designed specifically for the New York session, when volume peaks and the market makes its most decisive moves. Usually, you're watching the first 90 minutes after the New York Open. Each element reinforces the previous one, and when all 5 align, you don't just get an idea. You get a fully formed entry with logic, confirmation, and precise calculations behind it. Once you see the Venom components line up into a single scenario, the obvious question follows: why does this strategy actually work? The answer lies in market logic. The Venom model isn't built on indicators or generic patterns. It's built on the behavior of large capital. It doesn't try to predict the market. It reacts to the actions of the players who actually move price. While most traders rely on random signals, Venom focuses on where liquidity is being taken, the direction of the impulse, and whether there's an institutional footprint through FVGs, structure, and the specific session timing. The second reason it works: it rejects overcomplicated systems. Venom doesn't need a dozen filters, levels, zones, and indicators. It teaches you to look at the market simply, step by step, practical, where the hit happened, where they left the imbalance, and how the market reacted. That's what raises not only accuracy, but confidence in every entry. And finally, repeatability. This setup shows up again and again. Not every day, but when it does, it's unmistakable. All you need is patience and discipline. Wait for the moment and follow the rules. That's what makes Venom a strategy, not a chaotic set of signals. Now let's walk the Venom model through in practice, step by step, So you're not just learning theory, but exactly what to watch on the chart and in what order. Step 1. Identify the liquidity that formed before the New York session begins. These are usually the levels the market created during the Asian or London sessions. Local highs and lows, consolidation zones. Those levels frequently become the targets for a sweep during the first 90 minutes of New York. Mark those zones ahead of time. They're not places to enter, they're places to observe, because price will typically go there first to take stops and set up the conditions for a reversal. Step 2. The liquidity grab. Price spikes beyond those levels with a sharp impulse. Most traders assume it's a breakout and jump in, but the Venom approach is only starting to watch at this moment. What matters is that price reaches beyond the liquidity and then snaps back inside the range. Step 3. Confirmation through the FVG. Right after the liquidity grab, a fair value gap forms, a clean imbalance. That's the footprint of an institutional order. If the market respects that gap, it's a strong sign the move wasn't random. Step 4. The structure shift. Price forms a new high or low against the previous trend. That's your market structure shift, the confirmation that direction has truly changed. Step 5. The entry. You wait for a pullback into the OT zone, the 61.8% to 78.6% Fibonacci retracement of the last impulse. That's where you enter. Your stop goes beyond the manipulation's extreme. Your take profit targets the nearest imbalance, key level, or the day's high-low. This process doesn't just give you an entry, it gives you context, confirmation, and a clear mechanical framework. And most importantly, it repeats, again and again. You're not guessing, you're waiting. And if you've made it this far in the video, you already understand that Venom isn't just another ICT-style setup thrown onto the pile. So, let's break down what actually makes it different. First, specialization. Venom doesn't drown you in dozens of patterns or optional setups. It trains you to master one repeatable scenario until it becomes automatic. That's how professionals operate, not by spreading their attention thin, but by sharpening one tool until it becomes razor precise. Second, signal simplicity. There's no indicator crossover, no clutter, no unnecessary filters. Just structure, liquidity, time, and reaction. That doesn't make the strategy easy, but it makes it clear and, more importantly, repeatable. And third, mental discipline. Venom teaches you not to trade every day, not to force entries, not to jump into the market just because it's moving. You wait for the setup, for every condition to align. That's institutional thinking. You're not a signal chaser. You're an observer who steps in only when it's truly time. And if you internalize this mindset, even without taking trades every day, you'll start making decisions based on evidence, not emotion. And that alone will change your entire approach to trading. Now let me give you one piece of advice that will help you understand the Venom logic faster and develop the skill you actually need. Start small. Don't try to catch the Venom setup in live trading right away. Open a chart and simply watch the first 90 minutes of the New York session. Mark where liquidity was taken, whether an FVG appeared, and if there was a shift in market structure. Do this for at least 5 days in a row. No trades, just notes in a journal. You'll be surprised how quickly your eye starts recognizing the setup before it fully forms. And that's the first real step towards systematic trading, where you control the process, not your emotions. The Venom model demands discipline, strict rule following, and patience. There's no room for emotional trading here. You wait, you observe, you filter. You make decisions based on structure and price behavior. And that's where most traders fail. If you feel like you're not ready to invest that kind of time yet, understand this. Venom isn't a magic indicator. It's a strategy, tight, structured, and precise. It's not for traders who want quick signals or constant action. But if you're willing to wait, analyze, and act only when the facts line up, Venom can become one of the most reliable models in your entire playbook. Remember, one well-defined setup, mastered to the point of automation, will always bring more consistency than 10 scattered signals. So don't jump straight into live trading with Venom. Start with observation, track liquidity, watch how the market behaves during the first 90 minutes of New York. Break the setup down to its smallest components. That's the path. If this video brought you value, drop a like. Subscribe to the channel and turn on notifications so you don't miss the next breakdown. Learn to read the market like a market maker and trade like a professional.